Hey swing trading family, this is Super Swing Trader here. I hope you are doing well. Today we're going to take a look at the Dow Jones Industrial Average ETF on the Spider, DIA is the ticker symbol, and see where we can identify supply and demand zones and trade it for income. Before I do, if you're new to this channel, here I talk about swing trading, technical analysis using supply and demand, and trading with the big banks, not against them. If that's something you're interested in, please make sure to hit the subscribe button and turn on the bell notification so you can be notified whenever I release a new video. Also, please drop a comment below. Let me know, have you guys placed any trades and have you made any money with swing trading using supply and demand yet? Put a yes if you have, and put a no if you haven't. I really appreciate your comments because it helps me tailor my content to best serve you. Apart from that, let's get right to evaluating the charts. On this left side, I have the weekly chart. Every candle is 1 week. On the monthly chart, on the chart down here is a monthly chart. Every candle is 1 month. And on this upper right hand corner here, every candle is 3 months, so it's a very long term chart that I'm using here. But the long term charts can show you where the big banks are buying and where they're selling, whether or not it's an uptrend indefinitely or if it's showing signs of weakness. So let's take a look at the 3 month chart here first. We see that price has been increasing up to 2018 here, April 2018, and then just October 2018 it made a big drop and then it rallied up again. So we can see that there's a demand zone right here. Right here, it touched that demand zone, then it rallied up again. On the monthly chart, it's kind of small, so let's zoom in a little bit. We can see that the trend line, if we draw the trend line here, you can see that the trend line was broken because this big red candle formed and it broke the trend line. And then there's a supply here. Supply there, and then this could be a demand zone that brought price up again. This basing candle here, this doji basing candle here. So then it dropped down to this demand zone and it rallied back up again, but it hit this supply zone here, and then it forms this big red bearish engulfing candle, and then price dropped. So price could drop some more until it touches this moving average line, and then if it touches this line it could rally, or if it breaks this line it could go lower. I'll tell you why in a little bit here. But this is what we have on the monthly chart. It hit supply zone here and then it's dropping. There's rules to this method of trading, and it definitely has some play on the trade wars that's going on right now, just because we can see that this is supply zone doesn't mean that every time price comes in here it's gonna drop. There's nuances and rules manifesting the probability of the price dropping, and because of the trade war it's helping this drop in the supply zone. But without the trade war it could have easily broken this supply zone and go up higher, just because of the way that this supply zone was formed. It was formed because price dropped here and then the trend line reversed down, but also this is not very good. So if we had to take a look at this. It's not a very good supply zone, but it's working out because of the fundamentals of the trade war. But we would not be looking to short this area anyways. Okay, so let's take a look at the weekly chart here. We have a demand zone right here created down here. You could do this base, or you could take the whole candle up here like that. So if that's the case, then price has retraced to our weekly demand zone. But then as you can see here that the trend line, if you draw a trend line connecting these pivot points, this trend line was obviously broken, so we did not want to go with this. This demand zone here is low odds, or lower odds than if it didn't break the trend line. So then, like I was pointing to earlier before, as you can see, this EMA, this blue line, this is the EMA line, and you can see that it's within this demand zone. So we will have to wait for validation whether or not price is going to reverse from here. If it does reverse, then we can look at going long, but if it pushes through this zone, then for sure it's going to drop to down here to this demand zone down here. But it's really wide, so I wouldn't take this whole level. I'll probably do like half of this level only, just because your risk to reward is so big and so large that you don't want to take all this risk. You want to minimize your risk, and you want to, if price drops down here, it's great, but if it doesn't, then it's not a big deal either, because there are thousands of stocks to trade and hundreds of forex pairs to trade. So that's what we have on the Spider Dow Jones Industrial Average ETF. If price drops, breaks this zone, then we could look to go. It could look to move even lower. But then we do not want to buy right now because it's so high in this supply zone on the monthly chart that there's a huge amount of sell orders here. So that's all I have, guys. Thank you very much for watching this video. Please remember to give it a thumbs up if you enjoyed it, and leave a comment below, because I love to hear from you. And if you're not already subscribed, please click the subscribe button and also click that little bell icon. That way you'll get notified on the next video that I publish. Thanks again for watching.